The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, and welcome to our banking webinar that will feature Dave Bruni and Rick Riccardi from U.S. Bank. Among other things, David and Rick will be talking about the U.S. Bank Community Banking Program, SBA lending, foreign exchange, working capital lines of credit, equipment financing, and real estate lending. I'm Jeff Nuttall, publisher of the Northern Colorado Business Report, and I will be your moderator today. Before we get started, I want to reiterate how you can participate in today's webinar. Attendees will be in listen-only mode on your phone speakers, but we encourage you to ask questions through the control panel on the right side of your screen. We will hold these questions until the last 10 or 15 minutes of today's webinar and answer them during the Q&A portion. However, I encourage you to go ahead and type your questions in when you think of them so that we'll have them ready in the queue when we get to that point. The viewer window on the left allows you to see everything the presenter is sharing on their screen, and you should be seeing today's agenda right now. There it is. And now let's meet today's presenters. Dave Bruni is a Harvard MBA with over 25 years of leadership experience and 15+ years in commercial banking. Dave is U.S. Bank's market president for Northern Colorado and head of their region's commercial banking team. Over his career, he has led teams that have originated more than $1.6 billion in commercial banking loans. Dave lives in Windsor and is active in the Northern Colorado community and offices at US 34 just east of I-25. Rick Riccardi has been a bank development officer for the SBA's loan programs for the last 18 years. He is responsible for SBA 7A and SBA 504 programs for US Bank, covering Colorado, Wyoming, and New Mexico. Rick has generated over $192 million in SBA-backed loans in his career. He is a member of the Northern Colorado Commercial Association of Realtors and serves on the membership committee. And with that, ladies and gentlemen, I'm going to hand it over to Dave and Rick in that order, I believe.
Good afternoon. My name is Dave Bruni, and I'm with U.S. Bank's Community Banking here in Northern Colorado, and thank you very much for joining us today. U.S. Bank's Community Bank is a unique business model among the large banks. We're present in local communities, active in local nonprofits, provide local customer service and local loan underwriting through a local relationship manager, thereby enhancing a customer's experience with us. Yet U.S. Bank's Community Bank offers all of the complex financial products and services like foreign exchange, international trade finance, and sophisticated treasury management necessary to compete in the global economy today. Here's a summary of U.S. Bank's products and services, and I'll just touch on a couple of them. We'll be speaking a bit about commercial loans and lines of credit, commercial real estate loans, SBA loans, treasury management, international banking, and corporate payment and retail payment solutions and systems. This slide highlights U.S. Bank's capabilities. We're in 25 states with over 3,000 branches. We also provide wholesale banking and trust nationally and internationally. We've got payment systems in over 30 countries. We're the 5th largest bank in the country. And these second quarter performance metrics, you know, when compared to our peers, we were ranked #1 in all 3 key ratios for commercial bank performance. Our very strong capital position means we'll be around to partner with you for many years to come. Our low cost of funds also means we won't be beat on price. And here's a slide that speaks to what others think of U.S. Bank. We I'll just give you a minute to take a look at these. Fortune magazine in March of this year ranked us the highest bank in terms of being most admired among the super regionals. And as you can see on this slide, our overall score was 7.27, and if you look down on the lower right-hand side, that was higher than Goldman Sachs and several other banks that you may be familiar with. And Fortune in that same issue ranked us 5th in the world for having most admired management quality. And more specifically, if you take a close look at this list of the top 10 companies, there's not another bank in the top 10. And this slide speaks to the prestigious United Way Spirit of America Award that U.S. Bank won this year. One company nationally is selected based on volunteer engagement, philanthropic engagement, and community impact for giving back to the communities that we serve. And this is one that we're particularly proud of. U.S. Bank's community banking is grounded through its community roots, and yet we have national strength. So we've got a local presence, local customer service, and local underwriting. We've got streamlined loan approvals, we've got state-of-the-art financial products, and we're very involved in giving back to our communities through nonprofit volunteer work. Our commercial loan products include commercial and industrial loans, credit lines, as well as equipment term loans. We provide commercial real estate loans, owner-occupied and investor. We also offer equipment and technology leasing, letters of credit, etc. And all we need to complete our underwriting here in Northern Colorado is 3 years financial statements or tax returns for the business, 3 years personal tax returns for the sponsor, and a personal financial statement for the sponsor as well. Our non-credit product offerings include the following: capital markets, corporate trust, depository services, electronic invoice presentment and payment, employee services, equipment finance, treasury management, institutional trust and custody, liquidity and asset management, merchant processing through our Elevon subsidiary, and payment services. Treasury management. Our treasury management services that we offer are a fully integrated collection and payment solution. We've got robust tools to help you manage your cash flow and initiate transactions. And we've got leading edge products for both paper and electronic transactions, and we've got a strong implementation and customer service staff. This slide's really busy, but the short version of the story is we can basically help you expedite your cash cycle so you can turn your incoming revenues into working capital that much quicker and put it to work for you. As a payment solutions provider, we help you track key financial information and process transactions through one web portal. That's our U.S. Bank single point. And we also, as you can see, help you turn a variety of collection payment types into working capital. We've got over 3,000 branches in 25 states, but we also have remote deposit capabilities both through smartphones and through web scanners nationwide. Our international banking is particularly strong. We've got expansive global partnerships to help meet your needs. We've got a comprehensive range of solutions to maximize your cash flow, reduce your risk, and increase operational efficiency. If you're managing an international supply chain or if you're exporting, we can help you in many ways. We've got country experts that are fluent in over 40 languages, and we've got an exceptional customer service team and have 6 international processing sites. We've got a knowledgeable and seasoned team of international professionals, and throughout U.S. Bank, outstanding customer service is our top priority. U.S. Bank is a market leader in corporate payment systems. We help you drive out costs, improve oversight, and optimize cash flow, which enables you as a business owner to leverage your payment terms and maximize your supplier discounts. Our electronic invoice presentment and payment system eliminates the handling of paper invoices and checks. It audits each invoice to eliminate payment errors, avoid late fees and balance due invoices, improves security, and ensures regulatory compliance. I have read some data that each invoice that's processed costs about $5,000, or costs $5 to process. All of the paper involved with writing a check to pay an invoice. In this electronic system enables you to do that in a very efficient and very effective and secure manner. One of our payment systems products includes prepaid debit cards. It's very similar to a traditional debit card, except there's no credit check required or an existing bank relationship. These cards are pre-funded. They're single load or reloadable, but they can be used like any other Visa or MasterCard. And these prepaid cards are displacing cash and checks. Employers are using them, governments are using them, consumers are using them, and it's a very effective tool. And I'll just give you a quick example. We're working with a company currently that has international employees that come during the summer months. They're considering our prepaid debit card product as a way to pay these international employees that obviously don't have Social Security numbers and don't have local bank accounts. And it will enable their employees to, it'll simplify the payroll process for the company, and at the same time enable the employees to just go out and go to an ATM and get cash, or go to the grocery store or gas station and buy what they need. Prepaid cards represent a direct deposit alternative to almost any existing check or cash payment delivery system. They're efficient, streamlined, and reduces disbursement-related time and expense. Our electronic payment processing systems really provide an end-to-end advantage. As you can see, there's one processing platform for all types of payment systems, and we've got extensive in-house support in any time of you have a customer service need. Our payment solutions people, in particular merchant card processing, if you've got a U.S. Bank checking account, you get same-day ledger credit and next-day business funds when those merchant accounts are deposited into a U.S. Bank checking account. We utilize a gateway versus a direct connection system in our merchant card processing. What that really provides is additional security. Critical cardholder data is relocated to a centrally managed host to mitigate risk, and it's flexible and visible and simple to use. This slide speaks to some of the various security tools that we utilize to optimize and maintain all of the credit card data in the most secure fashion. We also have an electronic check service, which means a paper check is scanned through a check imager and converted into an electronic transaction, and it's imaged with the speed of a credit card transaction. Of course, we utilize the internet in terms of accessing all this data for your needs, and we have a very robust and very well rated internet capability for commercial banking. The U.S. Bank Money Center provides a full range of fixed income products for institutional customers. Our institutional trust and custody provides custodial services. We, of course, offer online access and asset management portfolio solutions. And here's just a brief list of some of our institutional trust and custody products and services. And these are the types of clients that we serve. Our asset management group has over $54 billion in assets under management. We have managed portfolios that have both taxable and tax-exempt strategies, and of course we offer institutional separately managed accounts. And our asset management advantage is provided with a culture of stability, integrity, and client satisfaction. U.S. Bank's Corporate Trust Service Group provides municipal and corporate customers trustee, agency, escrow, document custody, money market issuing, and CDO services globally through 51 offices. And we're one of the largest providers of corporate trust services in the United States. The U.S. Bank Community Development Corporation makes equity investments in low-income housing, historic, new market, and renewable energy tax credit projects through our primary production divisions as well as our syndication division. We've placed over $8 billion of tax credit equity through either that we've invested or raised since this group was created in 1988, and it's a wholly owned subsidiary of U.S. Bank, and we have a staff of U.S. Bank CDC folks in Denver, so they're easy to access and easy to use. U.S. Bank's capital markets capabilities are as follows. We've got fixed income, syndicated loans, interest rate derivatives, private placements, foreign exchange, and municipal securities. In particular, I want to make the point that U.S. Bank does not do proprietary trading for its own account. We do offer interest rate swaps, so a customer may want to convert a floating rate to a fixed rate product or vice versa. And we also provide foreign exchange for those companies that are doing international business and want to hedge that foreign exchange risk. Our equipment finance group is one of the largest in the nation, and we provide flexible and highly competitive financing for capital equipment, including medical and dental, document imaging and office equipment, IT, construction, corporate aircraft, transportation, and most other equipment types. We can also provide inventory and vendor manufacturer leasing programs. Our equipment finance group can help you improve your cash flow, minimize upfront costs, maximize tax benefits, keep credit lines open so you can finance your receivables and inventory, and help you keep your equipment and technology current. Our private client reserve is geared to high net worth individuals and families so they can manage their wealth. This is our business model. Each client is assigned a wealth management advisor, and he or she will then reach out and connect the client with an investment, trust professional, a private banker, an insurance person, or a financial or business planner as necessary to offer a customized, objective, and comprehensive solution. Our typical private client reserve clients include private business owners, C-level executives of public companies, partners in substantial real estate operations, professionals, and families with substantial wealth. Workplace banking enables business owners to give employees an excellent benefit at no cost to you. It provides your employees with convenient and accessible banking options and helps you achieve greater direct deposit adoption, reducing payroll processing costs. I want to thank you for your time and consideration in joining us today. This is my contact information, and I would love to have a follow-on conversation with you about U.S. Bank's community banking. And as I mentioned before, We're conveniently located here in northern Colorado on US 34, just east of I-25. And this is, I'm going to pass it off now to my friend and teammate, Rick Riccardi.
Thank you, David. Good afternoon, everyone. As David mentioned, my name is Rick Riccardi. I'm the Business Development Officer covering Colorado, Wyoming, and New Mexico for U.S. Bank's SBA division. And this segment of our presentation, we're going to review the SBA 7A and 504 programs. There are other SBA programs, a few to mention: the SBA Express program, Community Express program, Export Express, and Patriot Express programs. And although my division does not deal with those programs, just give me a call or give Dave a call, and we can direct you to the correct department that will handle that origination. So first, I'd like to talk about the SBA 7A program. This is pretty much a very versatile program for financing every need for a business. If you look at the slide, a few of the requirements are that the business be a for-profit U.S. business. It can't be foreign, can't be a nonprofit. It's got to be for-profit U.S. corporation. The maximum loan amount under the 7A program is $5 million. That was recently changed over the last year or so. So now we can do larger deals under this program. Most of the time, the loan proceeds will include real estate, construction, equipment, inventory, working capital, closing fees, and other intangible items. We can also finance business acquisitions where goodwill is involved, and I know that's a pretty common situation as well, and most people will use the SBA 7A program to do that. 7A eligible businesses are determined by size standards set forth in the Code of Federal Regulations, which you see there. You can go look it up if you'd like, but that's where the size standards are, and the SBA prescribes that businesses are of a retail nature have an average of $7 million in gross sales over the last 3 years. Wholesalers have 100 or less employees, and manufacturers have 500 or less employees. Now, as of late, the SBA has given the lenders discretion to use an alternate size standard, and we'll go over this size standard later because it is the size standard that's used by the 504. What we'll do is we'll look at the size standard probably under the 504 requirements first, and if they don't fit there, then we'll go back to the standard 7A, which you see listed in the first 3 bullet points. So that's something that we determine, and usually myself as an origination officer would find that out up front. Here's a list of the minimum SBA loan qualifications. In most every transaction, the SBA requires that there be a 10% non-borrowed cash equity, and this is for both real estate and non-real estate types transactions. So you're going to have to come in with 10% non-borrowed cash. The second bullet point mentions that home equity loans can be used. However, the debt service for that home equity payment must come from an outside source. It cannot come from the subject business doing the borrowing. So spousal income, investment income, things of that nature that can go to pay that payment, it will be allowed by SBA. This must be owner-occupied businesses, so it can't be passive investment or developer. This is strictly for owner-occupied. It's for the benefit of the small business owner. In situations where you're purchasing real estate, the acquisition, the borrowing entity must occupy 51% of the total square footage of the subject real estate, the building. If you're looking at doing construction, they want to see 60%. So that can be determined up front as well, and that's one of the things that I use to qualify the financing. Business acquisitions where there's a considerable amount of goodwill, greater than $500,000, the SBA does require a 25% equity injection. This situation can be tailored in a manner where a seller carry can be had for 10%, and the other 15% can come in from a borrower. So the SBA does give some leeway, but that seller carry portion would have to be kept on full standby, meaning no payments whatsoever for the term of the loan. Debt financing requests are eligible if SBA or if the terms are deemed unreasonable. So in other words, balloon payments or high interest rates, short amortization for long-term assets. What we have to do is in other cases is look to see a 10% improvement over the existing payment on that existing debt. So with the new loan, we try to get that improvement, and that's what makes it eligible. So we can do refinances under the 7A program. Now, in most financing programs, you're going to see that there's going to be a fee paid to the government, and in the 7A program, it's called the guarantee fee. Now, the SBA is, in most cases, going to guarantee 75% of the loan amount that you want. So these are some typical calculations of how you get to the actual fee that you would be paying. So what you need to do is you need to look at those dollar amounts. There are not, they're pretty much based on the 75% portion, because that's what you're paying the fee on. The lender's exposure is going to be 25%, and we are not allowed to charge a fee on that exposure. So in essence, you're going to have a 75% guarantee, and this is the amount that you're going to be paying. So you can use that however it works with your own situation. The interest rate rules, most lenders will set the rules themselves. The only thing the SBA does require is that the lender does not go over prime plus 2 3/4 or LIBOR plus 2 3/4. So 2 3/4 is the spread. Now, in situations where you have a fixed rate for a long term, say 10 years, 20 years, 25 years, the amortization would have to mirror that. And then SBA does allow for a longer term fixed rate, but we are, as a lender, allowed to go over that 2 3/4 spread based on a different calculation. So if the loan warrants the strength to get a longer term fixed rate, we will look at a higher spread than what you see here. Prepayment penalties, the 7A program does have a prepayment penalty. It's 3 years, so that's pretty aggressive. This is not any money that, or funds that any lender will earn. So U.S. Bank does not earn anything if the prepayment penalty comes into play. This is a payment that is made directly to the government, to the SBA. As you can see here, it's 5% first year, 3% second, and 1% third, then it goes away. Now, people can actually, borrowers will pay the principal balance, and they can prepay, they can prepay up to 24% of that principal in any of those 3 years without incurring the penalty. So I've had borrowers double payments and still not meet that 24% threshold. So there is a little bit of leeway in there, and it's a pretty good program in that respect, being flexible. Next, we'll discuss the SBA 504 program. Again, it's for U.S. businesses, for profit only. The maximum loan amount here is, again, $5 million on the SBA piece, because what you need to understand is the 504 program, most likely the structure will be a 50% conventional first position note with the actual lender, U.S. Bank, and then in second position, the SBA, through a certified development corporation, will finance 40% of what's needed for the project, and that's done through a debenture that's put out in the open marketplace, which is where the rate is set, and then the borrower is responsible for 10% at a minimum. So where you see over here, I put on the second bullet point that the total project could possibly be $11,250,000. Well, that's using $5 million for SBA, and then the lender's piece, and then the borrower's equity. So you can do larger projects. The only thing is the program is limited. We can only do real estate construction and also long-term useful life equipment. So really, it's a program that's made for long-term assets. And the benefits, again, if you go to the second page, is that we can do 90% financing for these real estate transactions, just like the 7A. The SBA's portion, which is that second 40% piece, that can actually be amortized for up to 20 years and fixed for 20 years. And I believe right now that rate is 3.77%. It's set on a monthly basis depending on what the open market purchases the debenture at. So a lot of times you're not going to know what your final rate is going to be on that piece until the debenture is sold and then the rate is determined. So that's why you'll see 20 years fixed. So it is a good long-term fixed rate. And but usually what you'll see is a 10-year prepayment penalty on that. So you will not be able to prepay that for at least 10 years without incurring a penalty. Most people don't want to refinance that because it is that long-term fixed rate. So they usually leave that in place, and a lot of times they will refinance the first position. Now the SBA, the rates are usually based on the 10-year Treasury. And the rate can be fixed for the life of the loan. We just have to determine the strength of the transaction. Typical fees on the SBA side of a 504 is usually about 2 to 3%. So it will range in between there, dependent on the type of deal, the size, and what the SBA/certified development company is willing to do. Lenders can charge a fee, but U.S. Bank does not. So we are one of the very few lenders that will not charge an origination fee. Some lenders will charge 1 to 1.5 points. On the next slide, you'll see the eligibility requirement. And this is where we go back to the 7A loan where we talked about eligibility. This is the threshold or the test that we'll use first off. And then if it doesn't meet this, we'll go to that other size standard. But you can see that the combined liquidity of the guarantors cannot be more than the total project costs. So if a borrower has this liquidity on their personal financial statements or in the business to cover the total project cost, the SBA says you don't need SBA financing because you're strong enough. The size standard gets to the net profits after taxes. They must be lower than $5 million. Also, the net worth of the company must be less than $15 million. So that's a pretty generous requirement for smaller businesses. So that's why a lot of times we don't see people actually being disqualified on the size standard. Again, situations similar to 7A, owner must occupy 51% of a building or 60% if we're looking at constructing it. We already talked about the SBA's debenture with the prepayment penalty. Usually it's 10 years and it's declining, so a 10.98 all the way down to 1. That equals out to the 10 years. The lender's prepayment on the conventional piece could either be 5 or 10 years depending on policy. Now, I know for our transactions, we actually use break funding, and I know a lot of other lenders in the marketplace use this as well. And this is a percentage calculation that's done by our risk management department. And what they determine is what would the interest have been earned over the life of the loan compared with what was earned to the payoff date. Now, if rates do go up, the break funding penalty reduces because your rate would be lower than what the going market is. This is definitely a case-by-case circumstance, and you would have to contact U.S. Bank, me as the originating officer, to go through and find out exactly what that prepayment penalty would be. So again, this is just a brief overview of the SBA 7A and 504 programs. This is my contact information, so when you print out all the slides, you'll have that. If you do have any specific questions, there's going to be ample time at the end of this presentation to do that, or you can email me directly or call me at my office. I'd be happy to answer anything that you have. Thank you.
All right, great. Thanks, Richard. The first question that we have for you gentlemen today, and I guess you'll decide who's going to answer each one, is with identity theft and check fraud so prevalent, does U.S. Bank have any products that can help prevent that?
Well, first off, I want to thank the questioner for that very astute question. We have a couple of products that are particularly effective. One of them is through our Treasury Management Department, and that is our Positive Pay product. And what that does is every night electronically, the customer will send a file to the bank, and as the checks are clearing the next morning, he or she will get a file back that gives them the opportunity to review and approve all of the checks that are clearing before they're actually paid. So if a fraudulent check appears on the list, the CFO or treasurer will have the opportunity to void that check and then contact us so we can get our fraud group involved and run that situation to ground. Another alternative is the prepaid debit card product I mentioned earlier. Just by paying your employees through these prepaid debit cards or through direct deposit, you eliminate payroll checks, and that's just one less avenue for a company to have its check stock floating around for potential fraudulent use. So thank you for asking.
Okay. The next question is, my credit line has been decreased by my bank. I suspect it may be due to my bank's financial condition or changes in their credit policy, and it puts me in a bind. How can U.S. Bank help me?
Again, I want to thank you for asking that question, because U.S. Bank, and particularly U.S. Bank's Community Bank, throughout this recent economic downturn over the last several years, we have been a consistent bank partner with our clients, lending throughout the economic downturn, and we're still very active today soliciting and developing new business with new customers. And if you have the least bit of doubt about where your existing relationship stands, we would welcome the opportunity to earn your business. Thank you.
Okay. The next two questions, maybe I'll kind of combine them. The first part is, what size of non-SBA loans or lines can you approve locally? And the second part is, what level do you start with private placement? Maybe those are
with private placement
questions.
Meaning, explain private placement if you could.
Well, that's just the question that came in from a listener, so that's
okay.
all I have.
So the first question is, what size type transactions will we entertain locally?
Yeah, how much can you improve locally for non-SBA loans?
For non-SBA loans, through my sales manager and our credit, that doesn't have to go to the headquarters, we can do up to $3 million, and then anything over that would need to have another signature upline. So that's, I think that answers what the question was. And then as for private placement, I'm not understanding private placement so much as if it's a referral situation. We don't participate loans. It's just our money, our financing, our program. We don't solicit or refer transactions out. And you know, I think Dave might have an idea as to private placement and what happens with that. I don't know if it's pertaining to SBA.
What level do you start is what it's
Sure,
asking.
maybe Dave can actually answer that, because I don't believe it's SBA related, but here's Dave.
Thank you for the question. For non-SBA loans, we have the ability less than $1 million to utilize a very streamlined and expedited approval process, and up to $10 million requires 2 signatures beyond myself. So it's a very streamlined process and very easy to use, and I would submit comparable to and frankly more efficient than many of our counterparts in the banking industry utilize. And then secondly, our private placement group, we've got very robust capabilities. We've got private, 20+ year private placement professionals that can help companies, larger companies, raise through the capital markets, both debt and equity private placements. And when I say larger companies, they would typically be a typical transaction maybe $10 to $25 million in size. So we can help the larger companies that have a private placement need.
Okay. A couple more SBA loan questions have come in. The next one is, what if the CEO is going through a divorce but well qualified other than that? Would you touch this for an SBA loan?
If the CEO is a 20% or greater owner, I'm assuming that that's the situation, then we would be looking to personal guarantees as required by the SBA. So in a lot of instances, we don't know what the future brings unless we have the divorce decree and that settlement. So in essence, it's kind of a wait and then see game. We would have to have that individual through the process with the divorce decree and settlement. Because again, we don't know how the assets are to be divided, so we really don't know the true strengths. There might be a true strength of the business, but again, there could be an adverse situation that may arise through the personal divorce situation. So we would actually wait until that is finished or finalized.
Okay. The next question is, how do you determine who the SBA guarantors need to be in a loan?
No, fairly easy. In most instances, it's the 20% rule, and that's where any individual who has a 20% or greater ownership would be responsible to personally guarantee the financing. Some situations you see people trying to get by this rule with doing 19.5 or 19%. SBA used to turn a blind eye to it. Not anymore. It's changed. So usually you'll see 15% or less. Those individuals are considered investors and not key. Now, mentioning the word key, we go back to key managers. There are some people that don't have ownership, but maybe the ownership is absentee, and there's only one key manager who works for every day and is responsible for the day-to-day management activities. Well, that individual will be required to guarantee because they're what drives the business, keeps the business going, and is there on a daily basis. So that's kind of a gray area situation, and it's case by case, but you can be assured that that 20% rule is definitely hard fast.
Okay. Next question. Right now, I go through a third-party vendor for my point-of-sale credit card processing. I'm tired of paying their fees. How can U.S. Bank help improve my bottom line?
That's also a great question. U.S. Bank is a payments processor itself, and that, in contrast with third-party vendors, our costs of processing each transaction is less, and because that cost is less, we can pass that cost savings on to our customers. So in addition to the security systems in place that I mentioned earlier on the call, we can also expedite your cash cycle in another way as well, because if you have a U.S. Bank checking account with us, that merchant card processing, you'll get a same-day ledger credit and next-day good funds in your checking account, typically saving 2 to 3 days that you would have to wait with a third-party vendor to get those funds.
Okay. The next question is, I have heard that SBA takes personal residences as collateral. Is that true?
Yeah, that is a situation where, I mean, these transactions are usually transactions that would not otherwise qualify for conventional type financing. So SBA back in, I believe it was 98, had put in rules where the lenders, as agents of SBA, have to comply with a one-to-one on the collateral. So we're talking about trying to get the dollar amount of the collateral available equity to mirror the dollar amount of the loan. Now, SBA will not decline a loan for lack of collateral, but if there are other assets available, mainly they're looking at real estate, we will encumber the residence. And to be honest, I usually tell individuals, because I know I've been through this through 18 years, and ever since this rule came in, that unless you're planning on, I mean, the lien is going to be there. If you decide you're going to switch out collateral because you're buying a new house, we're going to want to see, okay, is there like equity? Because we will switch that position. There are instances where you're going to be selling the house. Well, SBA's requirement is that net proceeds based on that equity come and pay the loan down. So, I mean, there's just, we do take residences as a requirement for SBA financing. And to tell you the truth, most people refinance their loans within 3 to 5 years and as a conventional basis, and those requirements go away. So they can expect that that lien will probably be there for about 3 to 5 years until something else is done.
All right. The last question I have today is, I saw that U.S. Bank moved to the number 3 ranking nationally in SBA dollar volume. Do you expect to increase volume for 2012 and continue your trend to lend to small businesses?
Oh, great. I guess somebody's actually reading up on what the press is putting out there. That's great. Yes, we have increased volume. We are continuing to increase volume year over year. So we are putting money on the street. A lot of what you hear in the media is Main Street is not being lent to, and I'll tell you, I have to say that maybe instances elsewhere, but right here we are, and U.S. Bank is definitely leading the way. I can tell you many transactions that I have now regarding businesses, new businesses, refinances, where job creation is is happening, and it's great to see. And I just had a borrower who will be closing on next week where he is doing a refinance, and it's going to allow him to have so much excess cash flow that he's planning on plowing it back into the business and hiring more salespeople. And I'll tell you, I'm actually going to get a letter from him on that because it was such a good story that that it's all about job creation, and SBA is definitely a good program that promotes that. It's well worth the dollars.
Okay. Guys, I just had another question come in. This is for non-SBA loans. How hard is it to get a small business loan or line of credit from U.S. Bank compared to other banks and community banks or credit unions?
That's a great question. If you consider a small business loan to be a loan less than $1 million of aggregate credit, we have a very streamlined system for that. So the underwriting is quicker, faster, and much more responsive. And I'll give you a case in point. We have a company that we're actually a couple of professionals that we're working with currently. Their loan was approved yesterday on Tuesday, and we hope to close them either Friday or Monday. So we'll have the documents and have it done in very short order. So it's something that we view as a strength of ours.
Sounds promising. All right. With all the questions delivered that we've got today, I'm going to bring this banking webinar to a close. The webinar will be available for download on the NCBR website. Please search www.ncbr.com, scroll down the left-hand side toward the bottom and select Webinar Series, and you'll see them there. Thank you all for attending, and I trust that you found the session as informative as I did. Once again, we've got the contact information for our panelists up on the screen, and I encourage you to reach out to them independently to drill down even further with any questions that you may have. And I also encourage you to look for more NCBR webinars in the future. Thanks, everyone, again for participating, and I wish you all a great afternoon and a great day.